Hello everybody. So I do this video maybe about once a quarter. It's Max 7. I'm going to talk about the top 7 stocks in the US economy, and I'm going to go through the valuation and discuss these Max 7. Why do I care about the Max 7? Why do I talk about the Max 7? Well, it's very simple. It's roughly 50% of the Nasdaq, the QQQ, and of course the Nasdaq is the index on which I judge the performance of all other stocks, and I always use it in my comparisons. Of course, these stocks, they are going to look more expensive than the average stock I cover in the channel because they benefit from the perpetual bid of ETFs, of mutual funds, of money managers just buying the market, financial advisors saying, oh, I want to increase securities exposure. These stocks are more expensive because they are the top stocks, they are the blue chip, they are the stock that everybody wants to own in a portfolio because they're the biggest stock. And so these stocks benefit not first and foremost, but as a big part of the valuation of these stocks is the monetary premium or the savings premium that they benefit from by virtue of being part of these index funds, by virtue of being at the top. If you're at the top of the index funds, you're likely to stay at the top because you're getting more and more of that bid coming in. And they are also relatively, in theory, a little less volatile than a lot of the stocks that I cover on the channel because of that perpetual bid. Now, I say normally because obviously if you look at the market recently, whether it's Nvidia or Tesla, we've had a taste of crazy volatility on these two recently. But Apple, Google, Amazon, they've been steadier stocks in the past. And so as a whole, these stocks tend to be steadier because of that monetary premium, because of people not actively deciding to buy the companies, but deciding to buy the indices, and they are the top companies in the indices. So you have that self-fulfilling prophecy. So let me go ahead and tell you what I think of each of the Max 7 stock. So the first stock is Apple. Apple, to me, I don't like it. Why don't I like it? Because you have an enormous lack of top-line growth, 5%. You're growing much slower than the number of dollars that are out there, than monetary expansion. You're not beating monetary expansion at 5%. By the way, most of these stocks don't beat monetary expansion except for maybe Meta and Nvidia, but most of these don't beat monetary expansion. So you're really reducing in size if you're only growing by 5%. That's not enough for me. Another criticism that I have for Apple is that, for example, if you look at their latest product, the iPhone 16e, that's not exactly what I would call true innovation. It could be a repeat of the 5C flop. You may remember that from 2014. So is innovation still there at Apple? A big debate. Now, they have a potential a tailwind, which is, of course, AI in future iPhones, which they call iPhone intelligence, Apple intelligence, what they call it. So that could lead to a new upgrade cycle, people rushing to upgrade their phones because they want to get Apple intelligence, an Apple phone with AI in it. And Apple, of course, is benefiting from the rise of open source and generative AI models. A year ago, you could have said, oh, Apple is really behind because they're not developing their own AI model. Well, turns out they don't really need to because there's a lot of open source right now, whether it's DeepSeek in China or Llama 3 in the US. There's a lot of open source that Apple could potentially use. Now, it's not a guarantee they would use the competitor Llama 3, but they could use open source models. And of course, a big question for me is when I see all of this, is Apple becoming the next IBM? Slow growth, resting on their laurels, but then probably takes still a few decades for them to fall as being a top company. They will probably remain a top company for a long, long time, but they're kind of resting on their laurels. At least that is what I see. Moving on to a company that is not resting on its laurels, it's Nvidia. Nvidia, to me, is the most attractive Max 7 from a valuation standpoint and a valuation alone. It exceeds the rule of 40 because it has a rule of 100 plus, rule of 124, and that's because of that amazing EBITDA margin, 64%. This company is literally printing cash. There's no other way to see it, on hardware no less. Think about that. They make that much money on hardware. Gross margin 75%. Predicted to grow revenue next 12 months at 60%. So we are well above monetary inflation. I love that growth numbers very much. And an enterprise value over gross profit or revenue growth, I'm only at a 0.47. So Nvidia looks cheap despite people getting scared of a market cap and saying, oh, 2.7 trillion, how much higher can it go? Well, in my view, many of these companies, in my view, by 2030 will likely be 10 trillion companies. Which of them is going to be the first 10 trillion company? I don't know, but Nvidia is clearly leading with that sort of revenue growth. Also, we've had a lot of validation of Nvidia. It seems like the drop of Nvidia was due to the DeepSeek fears, of course, but ever since then, we have even Sam Altman that came out saying they don't have enough GPUs. That's why they can't roll out their latest AI to everybody, because they don't have enough GPUs. Both leaders in the field of AI, Sam Altman and Elon Musk, agree that there's not enough GPUs. There's an enormous upgrade cycle coming. We've been talking about this for well over a year now. The Blackwell chips, they're finally being rolled out. There's going to be a lot of revenue for Nvidia and a lot of EBITDA margin for Nvidia based on those chips. Nvidia owns the platform for AI, which is their CUDA platform. It seems to be like the platform on which so many of those AI workloads are run, and it's Nvidia who owns it, and it's built on CUDA, and Nvidia owns CUDA. So it's a really big deal. When I look at the price of Nvidia at 112, I cannot understand how this stock is so low. It is very cheap now, under 0.5. If this stock were to reach near the 100, let's call it 105 or 102, I would be interested in buying this stock. I am almost near my buy zone. I will, just forget about my pride and buy it more than I sold it at when it had the first rise. That was a mistake to sell it. I think Nvidia is a wonderful stock for the long term. I'm eager to get back in. If it drops more, I will get back in. Moving on to another stock, which I look in a positive manner. It's Amazon. So Amazon, of course, it's not the cheapest on the growth adjusted basis. It's actually the third cheapest on a growth adjusted basis, because they're predicted to grow their revenue at only 10%. Now, keep in mind the base. We're talking about 637 billion in sales. So that's still enormous. Growing at 10% when you have more than 600 million in sales, that is still absolutely enormous. This company is so powerful by virtue of its revenue, but it's the cheapest company out of all of the Max 7 on pure value metrics. This is why you have a lot of value investors right now who are pounding the tables on Amazon. They find Amazon very undervalued on pure value metrics. Enterprise value over gross profit, for example, is only 6x. Enterprise value over forward revenue is only 3x, right? And enterprise value over EBITDA, the cheapest, it's the second cheapest you can find. The only closest to that is Google. Google is even cheaper on a price to profit ratio, quote unquote, right? But on a price to gross profit and a price to sales, Amazon looks like the cheapest. I actually think Amazon is slightly cheaper than Google. It depends on how you look at it. They're both cheap. But the point is that Amazon doesn't have some of the threats that Google may have. Amazon is still the e-commerce leader in both the USA and Europe by a long shot. There is no second best, as Saylor would say, not of Amazon, but they are the number one. Any neighborhood in the US you live in, you probably see those Amazon trucks 5-6 times a day, maybe more. They also are still the leader of the cloud. They are the leading cloud provider. They invented the cloud, and they're still the go-to company when it comes to the cloud. And of course, that's going to grow because they are deploying those GPUs for their customers. Advertising is still a revenue on the rise for them. It's still a big area for growth. Their advertising has very high conversion, because if you advertise on the Amazon platform, you can track if people buy based on your advertising on the platform. And they are still one of the most loved companies out there. If you look at their Net Promoter Score, they have the highest Net Promoter Score. This is a company that is really, really loved by its customers. People rave about Amazon like few people rave about companies, and this is true both in Europe and in the US. It's one of the favorite companies out there, and so from a marketing standpoint, they are doing something right. They are protecting themselves from attacks from governments and split up, because they are so loved. Not necessarily always loved by their employees, but definitely loved by their customers. So I like Amazon at this level. It's too slow of a growth for me, which is why I'm it's too slow of a growth. But one stock, let me move on to another stock that I really want to talk about here is Google. So I do own Google. Why do I own Google? One of the main reasons I own it is because we have 5% ownership in SpaceX. I treat Google like a savings account. Now, Google right now, I find cheap. That recent drop in Google price was really unwarranted, if you ask me. I think this stock will rebound. I know there's a lot of a narrative. Are AI chatbot threats? Well, that is the big question. AI chatbot threats, because, even me, Gemini is not my go-to. My go-to now is Grok, although I used to be a big fan of Llama 3 for the longest time. Now, whenever I want a more sophisticated answer, I still go to Grok. But Google search is still heavily used whenever you're looking for anything factual, or if you're looking for a place to eat or a place to go, or any sort of information where you don't need intelligence. Google search is still the number one. So I think we could have a threat from that if people start talking to their phones and having conversation with their phones instead of typing things on Google. But I think this conversation is a little premature, and this fear is a little premature. They are the leader in advertising. They make most of their revenue still today from advertising, and those ads, they place those ads on 9 apps. They have 9 apps with more than 1 billion users. This is Gemini telling me that, and you can see their apps with more than 1 billion users. Search, of course, more than half the planet uses Google search, so there's still even growth in there of people getting on the internet and getting to use Google. But Android, of course, is much more popular than iPhone, at least in other countries, not in the US. In the US, it's 50-50. But in the rest of the world, Android is the platform on which it's built, right? Because Android is open source. You have Google Chrome, which is like the leading browser, Gmail, Google Drive, Google Maps, right? Maps is used all over the world, Google Play Store, YouTube, and Google Photos. These are the apps with more than 1 billion users each, which is absolutely tremendous. As a comparison, Meta has 3 apps with more than 1 billion users. Their opportunities, and they of course also have GCP, right? GCP is their cloud service. It's not the biggest, not as big as Amazon, but it's still a high growth area. To me, what I find the most interesting about Google is their opportunities, their real opportunities. So Waymo, I don't find that Waymo is valued in the stock price of Google, their self-driving initiative, just like I don't find Tesla's self-driving initiative is valued in the stock price of Tesla. But their quantum computer initiatives at Google are also particularly interesting. They're very good at quantum. And the last one, like I said, is the 5% ownership in SpaceX. That keeps going up in value. That investment in SpaceX keeps going up in value. And it's my favorite way to get exposure to SpaceX is via Google stock. Moving on to Meta. Let's talk about Meta. Meta is one of the best turnaround stories out there. It's tough to think of a better turnaround story. At its peak, Meta did like a 10x compared to 2.5 or 3 years ago, 10x in 2.5 to 3 years, because the market was scared back then. The market was like, oh, Instagram is gonna die because of TikTok. You had the world's most followed influencer, which I think is Kim Kardashian, who was yelling at Zuckerberg for not doing what it needs and messing up the Instagram platform. Well, turns out Instagram did very well. They resisted to TikTok, contrary to prior belief at the time. It looks like TikTok, we don't know what's gonna happen, but still a overhang. But TikTok, Instagram is defending itself very well with TikTok, and that's contrary to the fears that there was back then. Another fear that was back then was the Apple privacy issue and cookie tracking issue. Apple did some changes. Instagram, Meta were able to use AI to boost their actual advertising revenue and still keep tracking their customers in different ways, and that turned out to have been a fear. And of course, whenever you talk about Meta, WhatsApp is a big part of this conversation. WhatsApp is an incredibly valuable app. The way I describe WhatsApp is they disrupted texting and calling and SMS around the world is pretty much what the WhatsApp app has disrupted, especially in emerging markets, but also in the US, also in Europe. They disrupted that everywhere. And so the question is WhatsApp, is it valued properly, right? Is it monetized properly? That's one of the big questions. Meta also has some real options, some very interesting one. Llama 3. Llama 3 has turned the world. Llama 3 has been highly praised, and the odds are they will release a new Llama in the future. And so the question is, what is Meta's spot going to be in the Gen AI race? Is the new Llama that they're going to release going to be even better? Llama 3 was very well respected, and I was using it all the time in the past prior to Grok 3, and I think their next iteration will be really good. So that's valuable for Meta. And of course, their job in AR and VR, the work that they're doing in AR and VR is arguably better than Apple, because the Apple Vision Pro, as much as I loved it, turns out it was a flop. It didn't really sell very well. Turns out the price point needs to be lower, and it seems like Meta is doing the better job at answering these questions from a market where a price point is actually affordable. So are they working on the next computing platform? Will they own the next computing platform? Clearly, to me, the present value of this is embedded into the stock. I do not find Meta particularly cheap right now, even if their EBITDA margin is absolutely outstanding. I much prefer an Amazon or a Google over a Meta as far as cheapness go, or especially a Nvidia if we're gonna go growth and cheapness together. Moving on to another stock that is not cheap, perhaps even less cheap than Meta, not perhaps, definitely less cheap than Meta, is Microsoft. So Microsoft is a stunning cash cow, 54% EBITDA margin. They essentially hold enterprises, I don't want to say hostage because you can always do whatever, but they pretty much own the enterprise market, right? They're more than $100 billion, quote unquote, big companies. I'm not sure how big they are, but I'm going to call them, more than just the small business down the street who acquire anything Microsoft makes, anything Microsoft ships, they acquire it. Microsoft is the big consolidator, is the big killer of most SaaS businesses around the world. Follow the stories of Microsoft Teams versus Zoom and Slack, right? Most companies didn't feel the need to pay for Slack or to pay for Zoom, and have stopped paying for it because they can just use Microsoft Teams. As much as employees complain about Microsoft Teams, this is, gaining traction among companies who have to use Microsoft tools, right? The same is true with Excel. A lot of companies do not allow you to use Google Sheets. You have to use Excel. So they own the enterprise market. So Microsoft is a bet on the enterprise market. Azure are also a major AI opportunities, just like Amazon, just like Google. They're installing these GPUs in their data centers and they're renting it onto the cloud, and that's a big opportunity. The partnership with OpenAI at Microsoft is still a question mark. Some people say it's still going to be good. Others say, oh, that's not going to be that good. Turns out OpenAI is not the best AI. And so it's a real option for them. It could have been, a master move, or it could have been a big threat with potential, lawsuits with OpenAI becoming a for-profit, etc. So the jury's still out on that one. I will say a good word on Microsoft on what they did in quantum computing. I still need to do a quantum computing video for this channel, but quantum computing, one of the deep techs out there, right? One of those that is not ripe for monetization just yet. It seems like Microsoft did a breakthrough with topological qubits in quantum computing, and I suggest you watch this video. Millions of views already. Apparently, it's pretty darn impressive. I will do a full video on compute at some point, but this is a complicated topic, and so I want to know what I'm talking about before I do it. But who has a real option in the next wave of computing? Seems like Google has it, in my view. Seems like Nvidia definitely has it. Seems like Microsoft has it, right? Meta, it's perhaps more of a bet on the next computing platform. Apple, perhaps closer to an IBM who's becoming out of touch, but could still make a bunch of money from the update cycles of people just upgrading their iPhones, and every 4 to 5 years, maybe less, just upgrading the iPhones, and so you have this recurring revenue just based on the Apple upgrade cycle of phones. So anyways, I'll conclude with the last video with the most debated company. This company is so hated right now. It's the most hated stock, and so that's why it dropped so hard. Oh, this drop has been very painful for me because Tesla is a very big position for me. But this drop has been awful because the internet, it just went back to what it was doing in 2022. In 2022, when Elon Musk bought X, the internet turned very anti-Elon, and then they forgot about it, and then it was back in style, and it seems like we're getting back into an era of fear, uncertainty, and doubt on Elon. People saying, oh, Elon Musk is killing the brand. People saying, retweeting that DA sells down 45% in Europe, and that number has a lot to do with the fact that they were changing the Model Y and upgrading the Model Y, and you had some Osborne effect. But anyways, yes, the sales are down in Europe. The sales, we'll see in the US, but it's going to be flattish, at least in the US. The sales of Tesla right now are in a transition period, of course, and this is what Elon Musk has said. But people tend to criticize Elon Musk a lot. The only not trust his word is what a lot of people are saying. what I will say about this is that reputation crises do not last forever. Many companies go through reputation crises. You may remember BP, British Petroleum, in the US back in the was it 2010 or something like that, with an oil spill and that major oil spill. People were boycotting BP. I remember distinctly. And it lasted maybe a year tops. I don't recall anybody boycotting BP anymore. And you may remember Nike in the 90s, right? People boycotted, saying they use sweatshops. Starbucks, how many periods of boycotts has Starbucks gone through between, preventing, I think, the homeless from using the bathroom, to having some bad event they had to shut down at one point? How many? Starbucks has gone through a lot of these reputation crises. Chipotle, do you remember the E. coli at Chipotle? I can think, and I have a long list, right? I could tell you Carnegie Steel. I could go, I could go back a long time. I really don't think reputation crises last as long as people think. So right now, it's still the 100 days of the Trump and Elon thing. This will stop being top up news at some point, I think, and I think the overhang on the stock will subside because of that. But right now, it seems everybody's so fearful. I am sorry, the news cycle typically lasts a few months, maybe half a year, maybe a year in the worst case scenario, and eventually boycotts never work. Eventually people just get back to the company, and Tesla is the profitable company in the space. They can more than withstand the storm. Yes, the sales of vehicles may be flat, but that's not where the value of Tesla lies. The value of the Tesla is almost a pre-revenue company, if you ask me. The value of Tesla lies in robotaxi. That's a pre-revenue business. Megapacks, Megapacks is growing super fast. It's a business growing at well over 100% a year. Not the past quarter, but the quarter prior to that. You could look at the number. Megapacks is ramping super fast. They just announced a new Megapack factory in Houston, so that's a big deal. In China, they just opened up a Megapack factory, so the ramp of Megapack is gonna go crazy, if you ask me. Then you have the FSD rollout, which they just launched in China, which they're waiting on regulatory approval to launch in Europe, right? The FSD rollout, I was stunned by how well they are doing in China. How can these FSD just handle China so easily? I think FSD could work in a lot of countries after I saw these videos in China. And so that's probably not, baked into the price. And of course, Optimus doesn't even have the beginning of an ounce of price baked into the price. People still laugh at Optimus. I think they will keep laughing, maybe for 12 months, maybe for 18 months, until people realize, oh wait, this could actually be a thing. It's a cult stock, like Palantir, like Apple back in the day. If you remember Apple back in the day, it was a cult stock. I could even put Amazon. If you remember Amazon back in 2002, 2003, it was like the most, if you watch old interviews, it was like the most, overvalued stock. People wouldn't believe it. They wouldn't understand it. At the end of the day, volatility is the price that has to be paid for higher returns, and Tesla is a highly volatile company. I am bullish about Tesla's future. I have no idea what Tesla will do in the coming months. I literally have no idea, but I am confident about the future of Tesla, as bad of a thing that is to say for a YouTuber, because right now the FUD on Tesla is very, very strong. But I'm still very bullish on my Tesla. So anyways, these were the Max 7. I hope this gives you a little bit my thoughts and this gives you an idea of the valuation, the updated valuation. This was not investment advice, not financial advice. This is just entertainment, hoping you are entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.